Hi traders, just recording this half an hour before the Dow close. I shorted up here at this 50% fibs. Sadly I took it off for the pivot. Was hoping to get a pullback to get short back up here, and of course it's just continued down, so I got half of this leg and not all of that leg. That's better than no leg at all, I guess. Tomorrow I will be looking for a pullback to, I hope we get a pullback to 12.5 or possibly even higher, to get short, because the way I'm thinking at the moment is first of all, we obviously, from a chart technical point of view, we've now broken a trend line. This is a CBO, a climactic breakout as far as I'm concerned. More for me for even thinking about getting out. I should have just got in and left it. The setup I used to get in this was a 5-minute chart where we had an M top. What do I mean by an M top? It's like a double top drop, the same as a double top drop. Here's the M. There's the first stem. Let's widen this up a bit. Or another way of drawing it is just to draw the trend line and just take the break. All I was doing was just shorting highs up here. I took this reversal bar here, took a little bit of heat, not much, and then took it off at this pivot. I was hoping to get short up here at 540, but wasn't able to. Okay, so that's what I'm looking for in that one. A retrace of that tomorrow. Yeah, I was saying, my thinking is, we're getting so close to the end of the week, to the Greek elections. We've had some very poor US data this week in terms of the budget deficit, continued lack of job creation, poor retail sales. The poor data has just been piling on, and it was stuttering up here. This is a distribution pattern up here. Every time we touched this 12,600 level, we sold. It was 50%, so it ticked a lot of boxes, so it seemed a natural thing to get short up there. The one thing I would say is, in a bear market like this, don't get distracted by big blue bars like this. It's very, very easy psychologically. If you see a big blue bar, a big buyer's bar, consciously and subconsciously you are probably thinking, "Oh, this market's going up, it's going long." But in a bear market, just see that as a pullback. In fact, the best way of handling a bull market a bear market is not to go long at all, just to go short, continually just short the highs. Now, I've said to you before, with the euro, get short, stay short. So get to the highs, get short, stay short. And that's what I've been doing today. I've been short for several hours, and so far got hardly anything out of it. Now look at this high up here at 12610. This is where we gapped up to on Sunday. So the high of today was that 12610. Okay, so I've been short up there, and I've got hardly any points to show for it at the moment. I'm just gonna, I've got short, I'm going to stay short. I'm going to carry this through into tomorrow, and if it works, carry it through into the weekend. So if you're in a privileged position as a day trader, if you assume you're a day trader listening to this, because you can take advantage of what's going on in these markets. So obviously we're holding this short-term up channel, but we are beginning to make lower closes now. And if we can just close below the 8 in half an hour at the top of this hour, then hopefully we can get some continued selling. The other trade, I was trading the oil again today as well. Again, nice big buyer's bar. It stopped at this trend line, put in a reversal bar, I did trade it up to back to this level and then started to get short as we broke down. So it was long above the 50 MA, short below the 50 MA, and that's a good general rule to have, unless of course you're trading with the euro, where down across the Dow, where you've got good reversal signals or a heck of a lot of resistance up there, Berlin walls up there. Okay, it's a trader's Berlin Wall. Right, what else? That's what I've traded. Unfortunately, I've not participated in this gold at all this week, which is a real total frustration for me. There's no clear reversal signals down here. I did get a slice of this. Unfortunately, I took it off and didn't get back in. But this 50% fibs, the only major key for this one was the fact that we have one close below the 50% and then quickly close back above it. So this 1587 level has held all this week, and so yesterday we had a big wave up and pull back after the data, and after that pullback was viable. There was a pivot level yesterday as well, and of course we topped out at 1625 today. So and of course we've got major resistance up here at 1630 and 1640 level. So tomorrow, let's have a look at where the pivot level is tomorrow. I think we'll be lucky if we touch this level here, 1613. Might get 1610. Yeah, let me put that. 1610 is a good. Obviously, if you're a swing trader and you don't get filled at 1610, then I'll just stay out anyway. I said in the video, I quoted sort of 1605. I'm sure 1606 came up in the conversation, but I hope some of you, at least, I know some of you got some of this piece of this action, which is extremely good. Right, let's go through the dailies. Now, these markets are so volatile. You've got good swing trading is not easy unless you're in at good levels. So here we are on the gold. We are just above that trend line. So on the daily, yeah, there's a lot of resistance up there at 1623. We've got all moving averages above us, below us, I should say. 3 moving averages below us and the 200 up there at 1642, which is going to be a major area of resistance. But given the kind of environment we've got, we could pop through that way at the end of the week as the safe haven of the gold gets bought. So here we are, we're 20 minutes off the close and we're back to the 8 and 20 cross. You can see why I took the pivot off, because there's a major level of support there. I thought at least we get some kind of bounce there, but unfortunately not. So we're below the 50 and the 200, but at the moment, with 20 minutes to go before the close, we're sitting on the 8 and 20. So how would I play this? Well, yesterday's video, it was hard to call this, but basically I was talking about there's a key trend line there. We were above it yesterday, we just peaked above it yesterday, and now of course we're back below it today. So as I said earlier in the video, I'm going to be looking for a short around about the 12,500 level to see if we can wind our way down and break 12,000 either. Who knows, maybe even this week we can break it, but certainly I would envisage if we start closing lower here tomorrow, and go into the weekend below 12,400, which was has been a key level for the last for quite a few days of trading here. Break below 12,400 and close down there, then I would get short and stay short to see if we can crack below 12,000. Okay, I think these markets are in a pretty bad way. Euro, it's sitting up there, so I'm short in this, and we are just sitting pretty much on the daily 20. So 2 days of buying and I'm short, but I've got a close stop. So I've got a bit of a buffer. My stop is at the highs. Let me just double check I definitely got the highs. Yep, my stop is above the highs, to include the spread. The fact that there is a lot of resistance here anyway. In fact, if I delete that trend line and create this one, it's not doing it. We've got the resistance there, but more importantly we've got resistance there. Top of this hammer is just there, and we are not quite closed yet, but more or less. If we do have a little spurt into the final hour of the day, then of course that scuppers my plan, but if anything I would see that just eking lower. Well, I hope it's going to eke lower and give me a close under that 20. You can see this 8 EMA is beginning to creep round, and let's face it, I'm fighting 2 days of higher closes, but I'm under this major pivot, and that's the only reason that's keeping me in this trade. The fact I'm under this major pivot from the place where we gapped on Sunday and the high of today. So could argue I'm somewhat counter-trend trade from the point of view of 2 high closes, but I've got a Berlin Wall in my favour to protect me. But worst case scenario, I get a stop out for a small loss, which is the way I like it. Low risk, high probability. Low risk, high reward. Right, pound. And the pound really suffered today. Like I said, I went long a couple of times, got a couple of moves to the upside as it kept hitting this resistance, but I didn't short this one. This one was a better short today. So that pulls back to 155.50. That is a potential short to see if we can break these lows. But like I said, these are extremely volatile conditions. We're in a big box here from 154.70 to 15600 still, and if we break out the bottom of that box, then I would expect a 250 point move at least. Let me tidy this up. Okay, it's not uncommon in a box play, but in Forex, to see higher moves. We've had two tests of that resistance level. You can see all this price action over here. It's a key level, and more recently up here, so that's not quite as low. So it's not uncommon in a bearish box to get these higher touches. Okay, and of course we're holding the 8 at the moment, so we need to close below the 8, and of course close below the trend line by the end of the week if that is going to fail. But at the moment I would only trade it intraday. I would not swing trade that. It is swing tradable, but as long as you're prepared to have well, in fact, it's not even a closed stop. You get a pullback to 155.50 or 155.40 to make sure you get in it. You only need about a 60-point stop. So in actual fact, I've just let me retract what I said before. That is swing tradable. That's definitely swing tradable on the basis that it's a very close stop. But the fact we're holding the 20 means it is lower probability, and we are in a box and flapping around with no clear direction as yet. Okay, so if you want to play safe and just watch it for now, then good idea. Pound yen was even weaker. Now this closed higher. Admittedly, it's up against a lot of resistance. But the fact we broke above the trend line and above the 820, I had expectations of that one. And in fact, I did go long at 123.50, which is what we talked about in last night's video, and got stopped out. So leaving that aside, US dollar CAD, that's above the 820. So the weakness in the oil, which I'll show you in a minute, is showing through in the US dollar CAD. To me, the dollar is a very good way of playing this market. But as with all the, it's not closed above that resistance, 102.95. It's a major area resistance. All of these markets are extremely volatile. There's no clear direction, and who knows, we might come back to our desks on Monday and the euro's gapped up and heading towards 130. Who knows? That's the nature of where we are at the moment. There's so much uncertainty that we're getting a lot of sideways action, typical of a market snookered in this kind of corner. Pound CAD, not worth trading. Pound Aussie dollar, that will be worth trading sometime soon, but that time has not come yet. Oil. Talked about the possibility of buying this level here, 82.50, 82.80. We came in contact with the ATMA and dropped right back. Invent showed a shrinking of reserves, which normally gives a good burst. It did give a good burst, but it was sold into. So sideways, can't get through the 8, with the possibility that could just get to 82.80, 82.50 tomorrow and just roll over. Alright, there's scope, there's room in the RSI for that to just have another leg down. Let's have a look at the FTSE. We don't often look at the FTSE. Very similar to the Dow. 820 underneath it. I think the Dow's got yes, the Dow's got a compression of the 820 right underneath it, hasn't it? So quick look at the grains, the corn. All these markets are pretty much going to be sideways. Soybeans. Talked about all the topping tails, all the resistance up there on the soybeans. Not broken the 8 though, so that's still in somewhat limbo, but that is a big seller's bar. Get a pullback to 14-15 area. Let's see if we can wind our way down to 1370. Okay. US dollar yen trapped under that 50 and 200 EMA, 8 and 20 right underneath it. So a very narrow box, not doing anything. But you certainly know where your stop is if you are short this. And let's see if that can burst out the bottom. So if you look at some of these shares, this is Bank of America. And Bank of America at the moment, very close to the close of the markets now, is holding up. So have a look at Apple. Apple is sideways. So despite the doom and gloom, these markets are not falling over at the moment. This is Goldman Sachs, and that's a very bad sign. That looks like we're coming in for another lower close here. but potential head and shoulders. Shoulder, head, shoulder. Let me just draw that. Shoulder, head, shoulder. So if we were to start breaking that neckline, I think that would get up to here pretty quickly and probably fill the gap pretty quickly. But obviously we've got a long way to, well, not even a long way to go. We need at least to close above this 96 to even think about going long. Okay, so I am short the euro and I'll stay short the euro. I am looking for a pullback in the Dow. This Dow is continuing to drop without me. So we look as if we're 10 minutes away from the close, and we look as if we're going to close below the 8 and 20. So a pullback to this trend line would be a great place. Yeah, just under that 12,500. And the euro, I can see my account is slightly better off. So we are edging lower, though not dropping hard. Okay, so if you're not short the euro, just watch these highs, particularly 125.65 area, to see if you can get short. See if you're a day trader, look for intraday short signals. The pound is very weak, so I'm looking for intraday shorts on the pound, and we're looking for pullbacks to go long. The gold, there's quite a topping tail on that gold. You've got to be careful of this. But I mean, any pullbacks to 1612 now, the best place to get in on that one. But you will really need a stop under there at 1585. Okay, I do hope that helps. And happy trading, and of course contact me if you have any questions. Thanks guys.